And welcome back to another Crypto Sunday. Starting off with several US states open investigation into crypto lender Genesis report. I made a video about Genesis before and what happened. Check it out after this one. But state regulators are turning their attention to troubled crypto firm Genesis Global Capital for potential securities violations. Following the collapse of FTX, multiple US regulatory agencies have opened investigations into FTX and other centralized exchanges and operators as the contagion continues. Now, if you want to know what contagion is, they say that when a large institution like the cryptocurrency exchange FTX implodes, it drags others down with it. That dynamic is what's referred to in finance as contagion, or the tendency for a financial crisis to spread to other institutions, markets, and regions. Going back to the article, the investigation into Genesis is part of a broader probe into how connected many cryptocurrency companies are and if these companies have violated state security laws. Borg cited the interdependencies and interlocking connections in the crypto space as a point of concern due to contagion risk when a player like FTX goes under. Genesis did not comment for the Barron's story. I think it's a very good thing that they start an investigation because a lot of people lost a lot of money and we should really know what happened and how far some companies are invested into other companies. Moving on to the next one, which is this one, about Alameda Research withdrawing $204 million ahead of bankruptcy filing, Arkham Intelligence. This is actually one of my favorite Twitter channels because they investigate things that are happening on the blockchain. And according to analysis from blockchain firm Arkham Intelligence, over 50% of the funds transferred after November 6 were in USD-pegged stablecoins. Alameda Research withdrew over $200 million from FTX US, so that's very important, before it filed for bankruptcy, according to analysis from blockchain firm Arkham Intelligence disclosed on November 25th. And they say in their tweet as well, this threat regards FTX US assets only and not FTX International. And we all know what happened to FTX International. It went bankrupt, and then quickly after, FTX US went bankrupt, even though they said everything was fine and they had all the liquidity needed. And of the Ether transfer, 35.5 million was sent to FTX and 13.8 million was sent to a large active trading wallet. The firm noted that it's unknown whether the almost 14 million in ETH was sent to crypto address as part of a trade or as an internal fund transfer within Alameda. Another 10.4 million was sent to the rival cryptocurrency exchange Binance. So I'm very happy that they're investigating this because there is so much bad things going on in crypto right now that is definitely good if some people are investigating it and if we get the whole story, the truth out there so that we can get back some trust within the crypto space. And one of the things to get trust back into the crypto space is this. Binance allocates another $1 billion for its crypto recovery fund. Other prominent crypto players, including Aptos Labs and Jump Crypto, have also joined Binance's initiative. The recovery fund would be used to buy distressed crypto assets and support the industry. The crypto market has seen a massive decline since the start of the year, leading to several crypto firms going out of business. Voyager, 3AC, FTX, and even BlockFi. And I think this is a very good thing as well, because this shows that even though a big player like Binance could have just been like, hey, we got our things in order, we're not going to help out, they show that they want to help to get some trust back into this system. But we also have to remember that this is good for them as well, because imagine everybody losing their faith in crypto, everybody exchanging their crypto into fiat. That would be the end of Binance as well, at least in my opinion. But either way, I think CZ is definitely doing some great things for the crypto industry in general. And then we've got this final article, which is about FTX killing crypto, long live Bitcoin. The FTX, and I have to say this goes for me as well, but the FTX collapse birthed a new wave of Bitcoin only sentiment. On-chain data suggests hodlers continue to believe despite mounting price pressure. Given the size of the troubled exchange and the number of entities caught up in its web, the FTX scandal has dominated headlines of late. I've made a couple of videos about this. This is probably going to be the last one with some FTX news because I think we've milked this out enough as it is already. And in particular, questions hang over Sam Bankman-Fried's political influence and connections, as well as FTX's apparent past with the Securities and Exchange Commission. And then the leading cryptocurrency is simple in design. This goes about Bitcoin and by all accounts a dinosaur in terms of technology. However, Maxis point out that these same deficiencies are what makes Bitcoin the only digital asset to hold. On the basis that Bitcoin has no overseeing foundation, crooked incentives or groups with special rights, Maxis argue that the tenets of decentralization, transparency and immutability are applicable only to BTC. In passionately defending this view, the Bitcoin-only crowd has been labeled toxic and narrow-minded in the past. Yet, the events of past week demonstrate a degree of truth, at least from the perspective of anti-Ponzi-nomics as applied to exchange tokens. I gotta say, I used to invest into meme coins, I used to invest into funny coins, I used to invest in coins like Bitcoin, Ethereum, crypto.com and many others. And my new strategy, I'm not a financial advisor, so please keep that in mind. My videos are meant to be educational and entertaining only, but the thing I did right now is if I'm going to dollar cost average into something, I'm going to do it in things like Bitcoin, Ethereum, crypto.com, like Binance, things that have been around for quite some while and that give me trust in the system. I'm not going to invest at this moment into funny coins. I'm going to make sure that my investments are safer than they were before. Obviously, anything can happen. We saw it with the collapse of FTX. But my opinion is, if you invest into a meme coin with a funny name, the chances of you losing money are much, much higher than when you're investing in Bitcoin. But like I said, not financial advice. Do your own research. Let me know in the comment section down below what's your strategy, and I'll see you next time. Doei!